You ever open QuickBooks and look at your bank feed and that long list pops up and you freeze? Like, how do I categorize these? What, if I categorize the wrong one, will I mess up the books? Well, don't worry. In this video, I'm gonna go over all of that, how to categorize and everything. That way, whenever you get to that point where you need to categorize things, it just becomes easier and you'll have a little more confidence. Hey, my name is Garrett and I'm a QuickBooks Pro Advisor. And I help businesses kind of grasp a hold of what bookkeeping is even. Try to put bookkeeping in the most simple form as I possibly can. That way you're not overwhelmed whenever you get to the point where you have to look at your books, because if you don't look at your books, you don't know your business's story. So let's dive into it. So the main thing we're gonna look at is why categorization matters. Excuse me. Think of categorization as like labeling every dollar. You know, you want, when it comes out of your business. If you label it wrong, you know, your reports will be wrong. So you don't want to mess it up too much, or you'll be overpaying on taxes, or even scarier, underpaying your taxes, because, you know, if you owe the government money, they care a lot more than if they owe you money. But let's use an example, like if you accidentally, you buy printer ink for your business and you accidentally label it as inventory. Well, the thing is whenever you come to look at your profit and loss statement, your inventory is going to be skewed and your COGS is going to be way out of whack, because it's going to be more than what it actually is. Really, that printer ink is an expense for office supplies or something, or however you want to categorize it. The good news is, though, once you get the basics down of categorizing, it's pretty simple and it becomes quick and easy. So the next deal is understanding account types. So, in QuickBooks, there's every category belongs to an account in the chart of accounts. So you're going to create these accounts inside of the chart account, and I'll show you actually on here. If you come over here, it's right here, but if you come to, transactions, and you go right here to chart of accounts, it'll pop up right here. So, or if you're already on the transactions page, you can just click the chart of accounts. But here is where you can create all the chart of accounts. You can add new, for an example, we'll say, I probably already have this, but no, I don't. Okay, so income is a good one. And you can just say income for the account type, and then come in here and we'll say sales of product. So if I sell a product, so I have an Amazon business, if I sell a product on my Amazon page, I'll categorize that once I get the money as income, and then sales of product. That's the big one that comes to mind whenever we're looking at. There's also cost of goods sold, which is like direct costs of selling your products and services. So if, like, whenever I buy my product in order to sell it on Amazon, that's a cost of goods sold. Then there's expenses. That's, office supplies, like we had mentioned earlier. There's loans, like if you're doing loan, you'll have your principal amount and you'll have your interest amount. Now the principal amount is just paying down what you owe, paying down your liability. So that's an equity transaction. But the interest is an expense, because that's what you're paying to the loan, supplier. That's the amount that you're paying to hold that money. The next one, we got assets. Things that your business owns. Owns. Assets are the things that your business owns. So if you have, say, vehicles and you have it all the way paid off, it is an asset to your business. Then there's liabilities. It could be a vehicle that you own, but you've pulled out money, so you owe money to the person that technically bought the truck, and now you're paying them back. And also, regular loans like bank loans or credit cards. Credit cards are also liabilities. And then there's equity. So equity is the one that's kind of strange. It's hardest to grasp a hold of, but it's pretty much the investment that an owner has in the business. So in order to balance the balance sheet, whatever is kind of left over is what the business what the business owes the owner. So a lot of times, especially starting out, business or owners will put money into the business of their own personal funds, and that right there is technically the equity that the business owes back to the owner. When you're choosing a category, you're basically telling QuickBooks, which of these buckets the transaction belongs to. So you have to be a little deliberate. You don't want to put it in the wrong one. You don't want your expenses being liabilities, your assets being cost of goods. It just gets all weird when you do that type of thing. So the common transactions that we do is like office supplies. That's a big one. So if can't think of anything right now. If you're running a bookkeeping business, like me, then you might want paper, ink, printer ink, maybe in certain situations, maybe computers, but that might run into asset. But anyways, there's also, for my business for Amazon, there's, inventory purchases. So all the inventory that I'm buying from my Amazon business to resell, to make money on, hopefully. That is considered an inventory asset. Then another common one is software subscriptions like QuickBooks. If you're, using QuickBooks to run your books, then you're going to have a monthly payment to, keep that going and everything. Another one is loan payment. You're going to split this one in two. Every time you pull a loan out, and every time you pay back a loan every month, usually, you're going to pay the principal amount and then the interest amount. The principal amount is just paying down the loan, so it's just going to be loan payment, and then your interest amount is an expense, so it's going to pay. You're going to pay a little bit in order to hold that loan money. And then the last one is owner's draw. Same thing as owner's investment. It's an equity play, but it's a draw. So you're going to be pulling money out of the business and putting it into your personal account. But now we'll move on to a couple tips to avoid, a couple tips to avoid mistakes. Sorry. Create rules for recurring transactions. So if, for example, like my business, I use one credit card for all of my inventory purchases. So I can create a rule that every time I buy from Amazon. So if I buy from Amazon, every time I buy from that, on that card at least, it's a inventory or COGS. I put them as COGS. So cost of goods sold. Another one you can do is use vendor names. That way you can separate the transactions for easier. And don't guess. If you have a question and you're like, I really don't know if this is the right thing to do, don't just throw it somewhere and hope for the best, because then, one, you're not consistent on your mistakes. You're kind of varying it. So whenever you go back and try to figure out like, well, why am I off by $1,000? It's really hard to narrow down why you're off by $1,000 because you just guessed and there's no real thinking behind it. If you put some thought into it and you did it wrong, at least you can go back and be like, oh, I know I did that because of this, so I can undo that and now I'm good, type of thing. If you're gonna be wrong, be consistently wrong. And then number 4, always, the main thing is keep your personal and your business finances separated. This golden rule number 1 in bookkeeping, in any business you're starting, keep your businesses separated. If you're not doing that, come tax time, it's going to be impossible for you to communicate with. If you're hiring somebody or if you're doing it yourself, it's going to be impossible for you to go back in time and just be like, all right, what was that Casey's trip or the Loaf and Jug or whatever gas station you have around you? What was that charge for? Was it gas? What did I go buy? Monster energy drink, or what was it? So just keep it separated and make sure you're doing business purchases, because then you can usually go back and be like, well, I only use my business card for gas at that gas station. And then lastly, last tip would be review monthly. You want to review monthly because it's going to be really hard to remember things that you've done past that. I categorize weekly, and then I come to the next step. I reconcile monthly. So reconciling is the next step after this, and it's the step that is the in the next video that I'm going to show right here.